Madison Reedy's just joined me in the studio to talk business. Financial Markets Authority has finished an investigation into Wynyard Group. Remind us who they are and what it was all about.
Wynyard Group is the crime-fighting security, or should I say was the crime-fighting security software company, and it did have some government contracts as well. It listed on the New Zealand Stock Exchange in about 2013 mid-year. It then failed in 2016. When it failed, it had a market valuation of about $38.5 million. So it went into a trading halt, then subsequently voluntary administration by the directors, and it's now still currently in liquidation. It has gone bust. There's no money to pay any of its investors back. When it did go into that trading halt and it absolutely failed, that did come as a surprise to shareholders. So the Financial Markets Authority investigated as to why investors were shocked by that move, and it released 2 years later its investigation findings today. And what it found was that the company's announcements to the market and to investors were always pretty generally positive, and they actually had little financial information. And specifically when the finances turned ugly, those announcements relatively remained the same. They still remained pretty positive. Some of the examples they said today were Wynyard signs $27 million conditional agreement. Wynyard signs $2.8 million agreement with state policing agency. So investors were, rather in the dark about this. The main issue that FMA did find, though, was that the board of directors did actually withhold some critical information, particularly about its cash flow situation. They realised that it would could possibly turn cash flow negative by the end of 2016. What they actually did at the board meeting in September that year, they internally upgraded that risk level to extreme. The investors in the market were never told about that. And the FMA also isn't actually taking any legal action, again surprisingly, against any of the directors. They say that's because it lacks the evidence and also the resources to do so, and it doesn't think it would win in court. Now, I interviewed the FMA head of capital markets today, Garth Stanish, and I asked him if that was too soft.
The reality, as you say, is that no doubt there will be criticism. There are possibly criticisms from both sides of the spectrum. There will be criticisms that we've been too hard or judgmental on the directors. There will be criticisms that we've been too soft, and we understand that. But like I say, we think this is the appropriate course of action in this particular case.
If this case isn't worth taking to court for all of those reasons that you've outlined, what then would be? How little would have to be disclosed to the market knowingly by directors? And how much investor money would have to be on the line and have to be lost for you to make a point of a case in court?
Look, I mean, that's a really abstract question, and that's another reality of the regulator shop. Each particular case is its own particular set of facts, and we use a whole lot of criteria in terms of judging what we take forward and what we don't.
That's the FMA's Director of Capital Markets, Garth Stanish, explaining to me why the regulator isn't taking legal action against any of the directors of Wynyard Group, despite finding that they did breach some disclosure rules.
Yeah, interesting, because I don't think investors would find that an abstract concept. But anyway.
It's probably also worth noting that the directors of Wynyard did come out in response to that as well. They rejected and refuted all of those claims that the FMA made. They did say it's taken far too long for them to make this, but they are happy to have some closure.
Consumer confidence survey came out today. So how are we looking? What's the vibe heading into Christmas?
The vibe is better, but not great. So it's been described as now back at average levels. So it has bounced back. This is the ANZ Roy Morgan Consumer Confidence Survey for the month of November. So this is kind of measured monthly.
But who wants to be average?
Well, no, we're just average, although that is better heading into Christmas. We have been, poor and pessimistic for the majority of the year. What is definitely a little bit more positive, and the bright light that kind of came out of this survey today, was that consumers' outlook is quite a bit more positive. So that's how they're feeling about how the economy is going to improve. So they think that, the 1,000 that were surveyed generally think that the economy is going to improve in the next year, and even more so in the next 5 years. And when you compare that to the business confidence survey that came out yesterday, there was quite a bit of a difference in that. That one hasn't bounced back. That's still sitting at rather pessimistic levels that we've been seeing for the past 3 months.
So can we anticipate from that people are still going to be out thrashing their credit cards and doing the Christmas shopping?
Well, I put that question to an economist today, and she said this is the chief economist of ANZ, Sharon Zollner. She said that it's really only historically average levels, and although it's improved and bounced back, they're not really going to go gung-ho in the malls. heading into Christmas.
What's happened on the market today as well?
The NZX Top 50 Index closed up just 0.3%. That's 29 points to close at 8,824. The New Zealand dollar's buying at 68.6 US cents, 93.8 to the Australian, and 53.7 against the British pence.
Thank you, Madison.